As we go through this, if you have a question that seems like it's topical to the slide that we're on, just raise your hand and we'll stop and answer it there. Where I'd like to start with this is just a disclaimer statement. RunSignup does not provide tax, legal, or accounting advice. This material has been prepared for informational purposes only and is not intended to provide, should not be relied on for tax, legal, or accounting advice. RunSignup makes no representations, warranties, or assurances as to the accuracy, currency, or completeness of the information provided in this presentation. Having said all that, a lot of what I'm getting ready to cover is going to sound like accounting and tax advice.
But it's not.
But it's not.
Kevin, where's your crowd?
I know.
I think it's good news. I think people are used to it.
I think my marketing worked really well.
We're viewing this as good news. The other thing I was saying, Brian, before you got here is that we were having a conversation and people were using the terms marketplace state and non-marketplace state. And so, to the extent that we've had good education on tax, I think it's been pretty good.
You're just amazing.
Thanks, Brian.
Good job.
Okay, so where did all this start? We talked about this a little bit this morning, but South Dakota sued Wayfair. Wayfair is the big furniture company that ships stuff all over the country. And Wayfair, if they didn't have a distribution center or a warehouse in a particular state, and they were shipping merchandise to another state, they weren't collecting sales tax on that. And South Dakota said that's not fair. That is penalizing folks that have bricks and mortar type stores in our state. And we think sales tax should be collected on that. We don't think it imposes an undue burden. And South Dakota won. And that was a Supreme Court case. So that really changed the law of the land with regard to Nexus. And we'll talk a little bit about what Nexus is in a minute. After that happened, this concept of economic nexus, or the amount of transactions or dollar volume that you ship to a state, became the new rule for how Nexus was determined and whether or not companies or marketplaces or vendors were required to collect sales tax. And that empowered states to pass what are now called marketplace laws. And as of today, 37 states, I know we've been kind of kicking this number around, I believe it's 37 states plus the District of Columbia all have a marketplace law. So 38 entities, which leaves 8 states left still to pass a marketplace law. And with the speed of which this is happening, we think probably within a year from now, all 45 states that have a sales tax will have a marketplace law. We started this process back in March and really started talking to folks about it at our symposium in July. And I think 5 states have had marketplace laws go into effect just since we've been talking about it in July. So still pretty good amount of momentum of states taking over or implementing this marketplace concept. So I referred to Nexus a minute ago. The law of the land used to be based on what's called physical nexus, which meant that if you had an office in a state, if you had a warehouse in a state, a distribution facility, or even employees in a state, that gave you nexus in that state, and that required you to collect sales tax. And this South Dakota versus Wayfair case changed all that and said it's based upon the number of transactions that you ship into a particular state. And what most states, South Dakota's law says if you have 200 transactions or $100,000 worth of transaction volume, you've met the threshold for economic nexus. And many states have adopted that same threshold. So RunSignup certainly has got that. And many of your races may have that individually. Even if you weren't kind of aggregated within the RunSignup ecosystem, you may have that many participants coming from out of state that give you nexus, even in states where you don't have a physical presence. And then what happened after that, which we talked about a minute ago, is that states took that concept of economic nexus, added on marketplace laws, and said, we're going to give the obligation with this economic nexus concept for marketplaces that arrange sales for third-party sellers to collect and remit tax on behalf of the third-party sellers. So that's really what has driven all this change that we've seen, not only in our industry, but in many industries where the marketplace is now responsible for collecting and remitting sales tax on behalf of their third-party sellers. So what have we done about sales tax? Well, we've done a number of things. First off, we commissioned a couple of different studies. We had a small accounting tax CPA firm in Colorado do an original Nexus study for us. And they looked at all the kind of stuff that's sold on our site, which is registrations and processing fees and merchandise and shirts and memberships. And they went state by state and figured out where that's taxable in each state. We then kind of backed that up with an additional look at that with a law firm called Reed Smith with some of their tax partners there to kind of go back over that data and confirm that it was correct. And we created a taxability matrix, which says, and I'll share that in a minute, which says in each state, how is that item taxed? And so that was the first thing that we did. I also put a reference here to all of the materials. So the runsignup.com/sales tax. If you go onto that link, that's where you'll see the taxability matrix. And you'll see really a whole bunch of educational materials that we have on sales tax. So what our position is in those different areas, what we view as our policies in those different areas, a number of blogs on the subject, as well as that taxability matrix. So you can see how we conclude or how we're following that taxability matrix in each of the states. And also part of that study was to determine where RunSignup had economic nexus, where there were marketplace facilitator laws, and the date with which those laws took effect so that we could decide when we would begin collecting on behalf of our third-party sellers or our races. Most of our collection efforts went into place a little bit after a lot of those laws took place. Most of our states went into place by February 2nd. The last state that has a marketplace sales tax went into place on December 17th. That was the state of Colorado. We also updated our platform to handle sales tax functionality. We incorporated that matrix into our overall process. I'll share some of those screenshots in a minute where you'll be able to see that on your race. That also works at checkout now. We're connected with Avalara, and what Avalara does for us is that when we process a transaction, we take the items that are being sold, the zip codes into which they're taxed, and we get a rate back from Avalara that we put into the cart when that transaction is done. And so we're live and have that up and running and have that available for each transaction as it's processed through our site. We've also built in new sales tax reports, and I'll show you in a minute with some screenshots on how you get to those. And then we've implemented collection and remittance in those marketplace states. So as I mentioned, we're up and live in every marketplace state that has a sales tax now, and that all began for us in December. So what kind of things are taxable? Race registrations, merchandise, which are shirts, hats, mugs, etc., memberships, tickets, processing fees, and each state has their own rules. That's why we built this taxability matrix to say where we think each one of those things are taxable in each particular state. Okay, so isn't my nonprofit exempt from sales tax? This is probably the most common question that we've got since implementing sales tax. In the context of a nonprofit putting on a race on our platform is a seller. And what nonprofits often think about is, I'm exempt from income tax, I'm exempt from state income tax, both federal and state income tax, and I'm exempt from paying sales tax. And a lot of times nonprofits have an exemption certificate and they send it to us and they say, hey, I'm exempt from sales tax. And you very well may be, but you're not exempt as the seller. Now, some states do have exemptions for sellers, and we've researched that as well. But the idea that you are exempt from state and federal income tax and from paying sales tax does not make you exempt as the seller. And that's what you are when you're on our platform. You are a seller of race registrations. You're a seller of merchandise. So as I mentioned, we did do research on when a nonprofit is exempt when they are a seller, and that is available on our site. You can see all the language and what you have to do to qualify for that. And I'll show you in a couple minutes how you get to that. But there are states that have exemptions for you as a seller. And it's not blanket. Sometimes the exemption works for a registration and not for merchandise. Sometimes it has to do with how often you hold events and how much you sell. But we've researched all that language, and you'll be able to read it and say, hey, I qualify for that. Let me take the exemption. Or, hey, I don't qualify for that, and I can't take the exemption. And that's also state by state on the rules for that. Okay, so here's the first look at the taxability matrix. And this is split 25 states at a time. So if your state's not on here, I'll flip to the other one as I get halfway through explaining how this works. So in the very left-hand column is each of the states. And then in the next three columns, it is the research and our view on the taxability of that item within that state. So Alaska's first. Alaska doesn't have a sales tax. A little bit complicated because actually some other cities and counties do, but the state doesn't have a sales tax. Alabama does. We just talked about Alabama a minute ago. The tax on race charge is the first column in there, and Alabama does have a sales tax on race charge or admissions. They also tax merchandise, They don't tax memberships. So that kind of covers three of the most common things that are sold on our site. And this matrix, by the way, is available on the RunSignup site. It's that link that I shared earlier. So you'll be able to get to that, see that if you want to do further research on that. The next column is nonprofit sales of taxable items. And that's a little bit of a complex column. So if it says taxable, that part's pretty clear. If it says taxable and it's got an asterisk or a plus next to it, where it says exempt next to it, that means in that state, nonprofits have some level of exemption that's available to them. And that's that research that we did where when you go to set up your race, you can look at that research and say, hey, I qualify for that, and I can take that exemption as a seller. So that's what that column's all about. I'm going to go to the next set of states and then explain the balance of the matrix. So the last three columns on here, tax one, race charges and tickets, nonprofits. So that kind of goes along with the previous column that tells you whether or not those are taxable if you're a nonprofit, if you're able to take that exemption. And then is RunSignup to collect on your behalf. So that means if it's a yes, it's a marketplace state. That means that we're going to collect on your behalf. It's a no either because that state has no sales tax at all, or it is a non-marketplace state, meaning you'll have the decision about whether or not you want to turn on sales tax in that state. If you decide that your state has a sales tax, you see some stuff on here that's going to be taxable in your state, and you turn it on and RunSignup, we'll do all of the same calculations for you in the cart for people when they check out. We'll collect that sales tax on your behalf, and then we'll remit it to you, and you'll do your own reporting with the state. And in a minute, I'll share places where you can get some of the sales tax reports so you can get the information that's necessary to be able to file those reports in non-marketplace states. And then the last one is processing fees. So that's the RunSignup fee. So RunSignup is the seller of the processing fee. And if you think about the way that this all works, we've got third-party race vendors that come onto our site that set up their races. They're selling pretty much everything to the left. And then RunSignup is selling the last thing on the right, which is the processing fee. So when a transaction happens, there's actually two sellers in that transaction. There's the race organizer owner who's selling the registration, the membership, the merchandise, and then there's RunSignup as a seller for the processing fee. And where that becomes important is with nonprofits. So a nonprofit may go in and set up and say, hey, I'm taking an exemption for my registration, but you aren't the seller of the processing fee. RunSignup is. So even if you can take an exemption for the overall race registration, if the processing fee is taxable in a particular state, RunSignup is the seller of that. We are not a nonprofit, so there's still a chance you could have a little sales tax on your registration that's related to the processing fee, even if you're an exempt 501c3 in that particular state. Okay, this slide is on sourcing, which is of the types of stuff that's sold on our site, where is it going to be taxed? So the first is registrations and event admissions. So the general rule on sales tax is it gets taxed where it's delivered. So a race or an event is delivered at the address that's being held. So that's where it's going to be taxed. So that's how the sourcing works for race registrations. The race is delivered at the address of the race, so that's where the taxing takes place in that state. Merchandise is where is it received by your customer. So that could be a couple different places. If you sell merchandise and you give it to your registrant when they come to the race, it's going to be taxed where they pick it up at the race address. If you ship it to the registrant, it's going to be taxed in the state where that registrant receives that merchandise. So there actually could be a couple of different treatments on merchandise depending upon how you handle it. If you deliver it to the customer when they show up at the race, or if you ship it to their home address. Processing fees. So once again, this idea is a little bit different with processing fees because RunSignup is the seller and the registrant or purchaser of that is purchasing that in a particular state. And our research concluded that the processing fee is delivered. That service of being able to find the registration and make it on RunSignup is delivered at the address of the cardholder. So that's where that tax would take place. This, when you think about these three different areas, it kind of gives you the opportunity to have a little bit of a complex taxing situation on just one registration. So you could have a race that happens in state A. You could have a registrant that comes from state B, and they could ship merchandise to their brother in state C. So you could actually have 3 different state sales taxes on one registration. And given the fact that we are a marketplace and so many states have marketplace rules, we're taking care of all that relative to those states where there's a marketplace law. Your only consideration or thought is if that's occurring in your home state and you are filing in those states, then you have to be concerned with the tax return that goes along with that particular state. The last item on here is memberships, and I've got depends on that. So if you are a club and you're selling a membership, we believe that the benefit of that membership is delivered at your club. So your club address is where that would be taxed. I put depends up there because USAT is a little bit of a complicated situation. So USAT sells what they call memberships, which could be a daily membership for a particular race. It also could be an annual membership. If it is a daily membership, we believe that that's delivered in just one place where that race is being held. So our way of viewing the taxability on that is it would be taxed at the location of the race. But if it's an annual membership, we believe that that benefit accrues to the member all year round and then would be taxed to them at their home address because they're not going to a USAT club to get that. So memberships are a little complicated depending upon who's selling it, but if it's just a normal club membership, we believe that that gets taxed in the location of where the club is. And memberships are taxed in only about 15 states, so it's not an issue everywhere, but that is obviously one of the common items that's sold on our site.
Excuse me, when you collect the sales tax, you collect state, city, and parish or county as well?
We do. So we go all the way down to the jurisdiction level. There's one kind of notable exception to that, which is Colorado. Colorado is a home rule state. So in Colorado, the home rule jurisdictions, some of them are administered by the state, meaning that they go on the state tax return. So we're handling all of those because Colorado has a marketplace law and their state administered home rule jurisdictions all roll up to that state. The other home rule jurisdictions within Colorado don't have marketplace law, so we made a decision not to collect in those particular areas. But to your original question, yes, we do go all the way down to the local jurisdictions. Virtual runs. So virtual runs, we believe that that run is delivered at the address of the registrant. A little bit of a complicated question, but that's the way that we've rolled on virtual runs, is that we believe that that race is delivered at their address, their home address. Yes. Sorry, go ahead.
Based on what I saw there, our state has there's not a tax on admissions, but there is a tax on merchandise. So if you have a race and it's set up a sign up, that it's $60 just to make this half marathon and you get a shirt. So are you not selling merchandise then? Is that whole admission not taxable?
Yeah, so on that, we have taken the position, most states have what's called a true object rule. And what a true object rule says is what is the participant actually buying? And we've concluded that in that scenario where they're registering for a race and they're getting a free t-shirt, that what they're really buying is the race registration. And the free t-shirt's just a coming along with that. So we're ignoring the t-shirt and saying it's not the sale of the t-shirt, it's the sale of a registration, and we're taxing just the registration part of it. Now, if your t-shirt has a separate cost to it because it's extra large or double XL, that part of it is the sale of merchandise, and that part would get taxed separately. And we'll talk about that in a minute, how you designate that as part of your giveaway. But the registration, if it's just coming with a free t-shirt along with it, we're just taxing the registration if that's taxable.
Then I have one more piggyback question on that. We
Yeah.
have another race that's a 5K. It's a chicken shot, and we have 5,000 people, but not all 5,000 people want a t-shirt, so that's set up a little differently. We actually have a registration fee and then a buy for like $10 per shirt. That would be taxable.
Yes, if you set it up as a separate item, it would be taxable, yes.
We can change that.
We can't give tax advice, but that might be a good strategy.
So Kevin, what if they set up 2 events and one event is with a t-shirt and one event is without a t-shirt and it's $10 less?
I think that both of those would be treated as a registration. So, and I'll show you screenshots of this in a minute, but in the financial dropdown on your race dashboard, there's basically an item now there that's called Sales Tax Version 2. We had an old sales tax system. We have decommissioned that at this point in time, and the only sales tax system we have now is Version 2. And under that has 4 different drop downs. One is Sales Tax Setup. And under Sales Tax Setup, that's where you're going to verify your taxability address, and then you're going to select any seller's exemptions that are available to you, either because you're a nonprofit. There's also an exemption that's available in the state of Florida that we highlight on there as well. Under the Sales Tax Jurisdiction Setup, that's where you're going to see all the states where RunSignup is acting as a marketplace, and we're going to just go ahead and collect on your behalf in those states. In the states that are unchecked, that's where you'll be able to go in, if that's your state, and check off that state, and then we'll begin collecting and remitting on your behalf, but we'll give you the tax so that you can file your own sales tax reports. And then under taxable items, any of these things that you set up, whether they're giveaways or store items within the system, there'll be drop downs where you can pick a taxability code on how that should be treated within RunSignup. So where you set up items is most often a text field. So you're just giving us a description, but we don't know with the taxability codes that we have set up with Avalara which one of those that is. So there's a drop down menu I'll show you in a minute that picks off basically a mapping to a taxability code within Avalara. And then the last one is a look at the sales tax reports that are available. Those will be probably very important to you if we're collecting and remitting the money to you to do your own sales tax reporting. They're more informational if we're doing that on your behalf. Okay, so this is a look at the first of those items, which is the sales tax setup. And there's a couple of different addresses that are up here. One is this concept of a general taxability address, and then the other is a shipping address. So the general taxability address is where is your race going to be taxed? And most of the time, well, this is going to pick the address of your race. Sometimes when you're setting up your race, you're going to get a warning that's going to say you've picked an address for your race that's not a valid address. And that's because maybe you're in a park or maybe you're on a street that's not a post office address. Most of the time, you don't need to do anything with this, particularly if you don't have that warning. But if you do have that warning, what we're asking you to do is take the closest public building or the closest house that has an address on it that's close to your race address that the post office will recognize and Avalara will recognize so that we can do the right sales tax on that. That's what that's all about. The shipping address is actually not that important. It's important in only a few states. There's this concept of destination and origin sourcing, and there's only 3 states that use origin sourcing. And what that would be is I'm shipping my merchandise from a place that's not my race address. So you can certainly update that. It only means something in a couple of states for intra-state purchases, but that's what that address is about, is if you wanted to update and put an address in there from where your merchandise is actually being shipped from. We assume it's the race address, but it isn't necessarily always the race address for your race.
Typically, it's the race address because that's where people are
picking up their stuff. And then this is what it looks like if you open up the taxability address. You've clicked off on the box that says my general taxability address is different than the Moorestown community house. And then you go ahead and you fill in the new address. Same thing on the shipping address down there. If you click that one, it will open up some boxes and you can put a different address that's in there.
Sometimes the easiest thing to do is open up Google Maps and find the local, like just a house that's close by, and click on Google Maps and they'll tell you that house, or find like a gas station or something like that.
So this is the next thing that you want to do within the sales tax setup, and this one is pretty important if you're a nonprofit, if you're a 501c3. This is where you can identify if your state has gotten a seller's exemption, where your sales within our system can be exempt from sales tax. So this particular race is in New Jersey, so the New Jersey information came up here. And you're going to have a box here that you're going to be able to check off. And in different states, there's different types of nonprofit organizations that can have the exemption. In some states, it's all of them. But in the state like Georgia, for instance, it's only religious institutions. So that's why we, religious organizations, so that's why we break this down into different types, because there's certain exemptions that are available in certain states and not in others. And then for the state of New Jersey, we go ahead and explain the rule. So you can read the rule and say, yeah, that's me. That's exactly what we do, and I'm going to enable the exemption. And we also tell you what that exemption is for. So this is for the exemption for the certification for nonprofit sales of taxable items. So we'll tell you whether it's for race registrations or whether it's for taxable items like merchandise. And then sometimes it's actually two different rules for a state. So there might be two different places where you can enable that exemption. But your state is going to pop up to the top of that list based upon your race address. And then you can look at that, determine what type of organization you are, if you're any one of those exempt types of organizations at the top. Read the description, and if you fit that, go ahead and click on it, and then those sales on our site will then become exempt. And we'll also have that in our record keeping. We'll know you're that, and if the state ever comes and asks us, why didn't you tax that sale, we'll be able to go back and say, hey, these guys told us they're a charitable organization and they qualify under the New Jersey law. Next section is the sales tax jurisdiction setup. So this explains or shows you state by state all the boxes that are checked off in marketplace states. So if your race is in a marketplace state and the registration is taxable, we're going to collect and remit on your behalf. If you have a participant that's coming and registering from a marketplace state where the processing fee is taxable, we're going to collect and remit on our behalf in those states. And all of the states are listed on here. You can go down the list when you're setting up your race. All the ones that have the orange block checked are all marketplace states where RunSignup is going to collect and remit on your behalf. The rest of the states that are open are ones where you can decide. You can decide in a non-marketplace state, I want to turn on sales tax, in which case we'll do the same calculation collection on your behalf, but we'll give you the money as part of the normal payments that you make to you, and then you'll file your own sales tax report with the state. And then taxable items is the next section. So we're dropping down. This is your dashboard menus. This is the financial section. So sales tax V2 that we talked about. We're now on the third item down here, which is taxable items. So when you set up your race, if you set up a giveaway, or if you set up a store item, or if you set up a membership, then those boxes or windows are going to show up for you and give you an opportunity to pick a code that tells us or maps to Avalara so we know what the taxability of that should be. So if an item in that category is generally taxable, usually what default means is we're just going to assume it's generally taxable unless you tell us something else. So in an item like giveaways, we assume that's taxable unless if you open it up, which I'll show you. So if you open that up and you tell us that that's clothing, in the state of New Jersey, merchandise is taxable, but clothing is not. So if you were shipping a clothing item into the state of New Jersey and you've told us clothing, we're going to know not to tax that. So that's why that's important. If you're selling something that's other than what might always be taxable, which is merchandise, then you want to open up each one of those things and let us know which of the taxability codes best describes what it is that you're selling in that category. And then the last category under that menu is sales tax reports. And there's two different types of reports that are available: summary report and transaction reports. If you're doing your own sales tax reporting, as I mentioned, these are going to be very important. If we're doing the reporting for you, they're informational. But if you ever should get audited by your state, this is where you're going to go to be able to say, hey, RunSignup taxed these on my behalf. Here's the amount of sales that they taxed. Here's the amount of tax that they paid over to you. So you'll potentially be able to, if you ever got audited, handle the first step of that, which is to be able to talk to the state about what sales were taxed on your behalf and which amounts of money RunSignup paid over to the state on your behalf. So that's what these summary reports are. There's actually two sections to that. So the first section is summary by state. And this particular race is a little bit of a complicated race. It's actually in New Jersey. But it gets registrants from a bunch of different states. So that's why you see multiple states on this report, because they have registrants that are coming from other states who might have ordered a shirt that was taxable, or they might be in a state where a processing fee was taxable. And because many of those are marketplace states, we're handling the collection and remittance on their behalf. But we're also telling them about that. And all the different states where they had a transaction that was taxable or could have been taxable, what the amount of transactions were in that state, the taxable amount, the exempt amount, and then the total sales tax. If any of you have ever filled out a sales tax report, this is generally the information that you need to fill out that report. You usually need to be able to tell the state, what were my taxable sales, what were my exempt sales, what were my total sales, which is just the combination of those two, and then how much sales tax was it on those transactions. So this is the basic information that you need to fill out your sales tax return if you're in a non-marketplace state. And then the second half, or the bottom portion of this report, breaks it down even further into jurisdictions. So on some state sales tax reports, you have to go further than just reporting at the state level. You have to talk about cities and towns and counties, different jurisdictions within the state. And that's what this does. This breaks down further within each state in the event that you have to report to a city, county, other jurisdiction lower than the state level. It shows the taxable and exempt sales in those jurisdictions and the amount of tax that was collected in each of those individual places. So you could fill out your return, or if you were ever audited by the state, you could show them how that money was distributed all the way down to the jurisdiction level within that state by RunSignup on your behalf. And then the last type of report in here is a transaction report. And this is the most or the highest level of detail. What this does is it goes all the way down to the transaction level and breaks down the amount of that transaction and the amount of sales tax that was withheld on that transaction. So if you were an accountant and you desire to do so, you could trace that sales tax that was collected all the way down to the transaction level and see how that was taxed on each individual transaction that rolled up to those jurisdictions and then rolled up to those states that were in those summary reports.
And auditors would do some spot checks on that or something?
They might, yeah, absolutely. Yeah, that's the type of process that they want to see. So that process in the accounting lingo is called tracing, which is to be able to take a transaction all the way down to its base level. First see that remittance was done to the state, then see that remittance was done to the jurisdiction, and then see the transactions that back that up. And what an auditor might want to do is go all the way down and say, hey, this person registered for this race. I'd like to see how that flowed all the way through into a tax return. And that's where they would be able to see, or you would be able to see how that transaction was taxed and how it got into your return. Yes.
On the summary report, it goes by month. It's monthly reports, or is it by?
It's a date range.
Yeah.
Pick a date range.
Okay.
Yeah. So we and we actually did
there in that search.
In the search bar, you can pull it down and put a particular date range in there. And we actually did test out the month of December and for all of RunSignup and compared it to Avalara, who was doing a lot of the reporting on us, and we had only across a lot of transactions, only a few dollars off here and there, which might have been related to just if something fell over at midnight on the last day of the month. So it's turning out to be very accurate, our records versus what's in Avalara, which is exactly what we want. Okay, next steps. What's left in this process for us? So we're still learning about our taxability matrix. For instance, Georgia passed a law recently that said that race registrations are not taxable, and we've updated our matrix for that. We got a reach out from, I believe, the state of Arkansas relative to the taxability of registrations in that state, and we're researching that right now. Texas goes back and forth on us. We started out thinking that Texas registrations were taxable. We got an email that was forwarded on to us from a race director from the state that said, no, they're not taxable, so we changed our matrix. And then a week or so ago, I got a call from an accountant from one of our races who said they believe they are taxable. So we're leaving ours as is for now because we have this nice email from the state that seems to back up our position, but we're still learning stuff about our taxability matrix. And if you know something about your state that isn't reflected or you don't think is reflected properly in our matrix, we do want to hear about that. But what we really would like in that communication is the state sales tax code and a highlighting that shows where the state has a position that's different than we have in our taxability matrix. And we have gotten that from some race directors, and that's been very helpful to us. Sometimes there's an interpretation and we run it by our attorneys and kind of check out. So we'll always do that process to make sure that we feel really good about making that change. But we have made some of those changes and encourage you to let us know about that with that backup information if you see something in your state that you know about that doesn't match the way our matrix works. We're working next on membership, tickets, and a standalone store. Those are places that we still need to build out sales tax functionality in our system, so that's coming. Steven's got that on his roadmap, and we should be working on that next in our sales tax product. And then last, make sure that you've registered your nonprofit exempt status. So we just assumed nonprofits were non-taxable for the first couple of weeks that we rolled out sales tax. We stopped assuming that in mid-December. So if you had a race that was open across that period of time and you've not done that yet, and there's something in your state that's taxable, it might be getting taxed right now, even though you could take that exemption. So go in and review your races if you are a nonprofit. Go through that tax setup screen that we talked about and click off the appropriate categories for nonprofit and take those exemptions when they're available to you in your state. And I think that's it for my prepared comments. Any more questions that we haven't addressed as we've gone through things?
One of the things we've talked about in previous meetings is, so RunSignup will file all the sales taxes for Utah because it's a marketplace state or something. Do we expose the tax IDs of all the races that are in Utah, or how do we file that?
Yeah, so we don't. So the state of Utah gets one big tax return from RunSignup, and we don't put individual races in there. We don't put individual tax ID numbers in there. It's just one big tax return that comes from RunSignup. That's our understanding of how the marketplace law works. So there's no individual exposure of your particular race or your particular tax ID number. So that's kind of what we're doing from a RunSignup reporting standpoint for the marketplace. If the state of Utah comes to you and says, hey, where's my taxes? You can say RunSignup is filing them on my behalf, and here's the reports I have in the system that show how my transactions were taxed and how much money was passed along to you from RunSignup. And if necessary, if the state ever wanted to talk to us, we would help out with that process to show how that all flowed through on your behalf. But our normal filing doesn't expose you as a particular race or as a particular tax ID number.
However, if they do say you owe taxes back to 2005, we have no obligation or ability to help with that.
Yeah, that's correct. Our help with that is really from the period of December going forward for those the time periods that we have been collecting revenue on your behalf. Other questions?
So as the state becomes a marketplace state, RunSignup is going to pick them up automatically?
We will, and actually a couple of those happened on January 1st. Hawaii became a marketplace state. North Carolina also became a marketplace state. So we flipped the switch on January 1st and began collecting and remitting on behalf. Prior to that, they were a non-marketplace state, and races could have opted to have us collect and give them the money, but on January 1st, we flipped them automatically.
The thing to be kind of aware of when that happens in a state is that nonprofits have to consciously go in and elect their exemption status. And just to reemphasize what Kevin said a few minutes ago, effective December 15th, we did that for all nonprofits. So if you're a nonprofit race, you have to go into the system and say, yes, I am nonprofit, and yes, I comply with this state's application of that. So it is the one place where we're kind of forcing you to do something.
Yeah, and that's only because these state rules are very specific. They have a particular set of language that you have to comply with. We can't just assume that you comply with that. We actually, we haven't asked you to prove your nonprofit status or to let us know that you're in good standing with the state or the federal government, any of those things. So we're asking you to look at that, determine whether or not it applies to you, tell us what kind of organization you are, and then tell us whether or not that particular exemption applies to you.
Yeah, and we may know that you're a 501c3, but we don't know, each one of these state rules is more than just your 501c3. Like you saw that state of New Jersey, there were 6 items on there that you needed to say, yes, I comply with each one of these 6.
Where do you go for your particular state that you can find what you are tax exempt from or not?
In our dashboard.
I looked at it, it's a
there's
home rule state.
Yeah, so if there's nothing there, your state doesn't have an exemption for nonprofit. Or at least not one that we could find. Question back to you.
Are political parties considered tax exempt? Democratic Party in my area wants to do a fundraiser for candidates, and they want to put on a 5K. So I don't know how that.
So yeah, there was a set of blocks that was on there, and I don't believe one of those was political party.
No.
Pretty sure it wasn't.
They get charged twice, don't they?
Yeah, that hasn't been our experience. I know some of them have got some initials next to how they're set up, but without providing tax advice, I don't think they're normally considered a nonprofit, at least for this purpose. Yes.
Taxable address if your race starts and crosses and finishes in different jurisdictions?
That's a good question. And it's another one of the reasons why that's up there. So when you put the address in for your race, it's going to use that to start with. It's another one of those kind of tricky areas where it's hard for us to tell you what you should do. You might want to ask your tax advisor about that if it's across multiple states. I don't know the answer to that, how that would work. My guess would be it would be related to where that race finishes, but I don't know that for sure.
I think it's where it starts.
You think it's where it starts? Yeah. I guess, yeah, you could make an argument either way. So where's it delivered start? Yeah. Where do you get your time? Finish?
Beers and finish.
Where do you start your time?
Right, that's true.
I'll go back and forth all day.
Yeah, I don't know the answer to that one, but I'll see if we can get some type of advice on that. Yes.
One of our events is in Maryland, and if I remember correctly, it had one of the little asterisks next to it. It said something I think about it's based on the number of participants.
Yeah, let's go back to that one. All right, so Maryland says taxable plus, and plus is provide a limited exemption either different from or in addition to exempt based on day count. Yeah, so what that means is Maryland's got an exemption. And if you have your race set up in Maryland and you go into that tax setup screen, you'll be able to read exactly what that is. So unless it just says plain old taxable on that matrix, if it just says that, it means there's no exemption available. If it's got taxable and then some type of an asterisk to go along with it where it says exempt, then there is a type of exemption that's available in that state. So what you want to do is just go into that taxability setup. If your race is in Maryland, that one will pop to the top and you can just read and see whether or not you qualify for that. Other questions? Okay. Thank you.